27,000. So we put our schedule up, division B, division A, the group. Then we deal with the external sales first. The external sales for division B is 150,000 times the selling price. Then what is the external sales for division A? Remember they sell how many? 200. 200 at what price? 15. So what do we have? 200,000. Just 200 at 15. 3,000. Do you see my presentation? So in total, the group will make how much? 30,000. We said the total of A is 350, right? And they sell 200 to the external from the question.
Maximum annual.
No. Current annual. We are not using the maximum, we are using the current. Current annual capacity of sales, both internal and external, is 350. Can you see that?
Yes.
So this 350, we sell 200. Then it says maximum to the external is 200. Can you see that? So the internal is what? 150. So the first thing is the revenue external. The revenue internal. Who is selling to who? A is selling to B. How many? 150 at what? 13. So can I have the answer? What do we have? 1,000. That one will not come to the group because it will just be within the divisions. So total revenue. What do we have? This place will still be 27. This place will still be 30,000. And this place, 4,000. That's the revenue. Then let's look at the cost element. What are the costs they say we will incur? So we will take it department by department. Let's go department B first. It says that other material supplied from an external supplier is what? Remember the information they have given us here is for each battery. Can you see that? Each. So if each other material from external supplier, what is the cost there? But first, what they are buying from A. So purchases from A. So transfer from A. Follow me carefully. It will be a revenue for this guy, but it will be cost for this guy. So that's same figure, 1950. Then from the external supplier, how much? What is the rate? Is it 45? 45. How many things are we demanding from the supplier? How many portable are we producing during the year? 150,000, right? So we multiply that by 150,000. I hope you are not missing. Because when we are looking at production cost, we will look at the annual production and annual sales. So we are that's why we use the 150 here, because that figure there was for sales and production. What do I have? 45, 150,000. What do I have? Why is it there? Yeah, it's there because that's the maximum we can sell during the year.
6,000.
For the B. You know the B sells totally to the external. That's the maximum they can sell. Do you get the idea? What did you get? 6,750. What else is the cost we have there? I can see labor cost. What is the issue? So 35 times what? 150,000. What do we have? 5,250. Any other cost? We have overheads for B. We have overheads for B. We have annual fixed cost. Yeah, but you see, we are sort of using marginal costing approach here. So we're going to be bringing the variable cost, less it from the total revenue and get contribution, then we will less what? The fixed cost. Sounds good? So let's go to B. Sorry, Department A. Department A, what do we have? What are the cost items? Material is 3. Can you see material? So 3, what do we have? So I'll put that here as external material. H. 3 times, what is the production for 350? Okay, what do we have? So let me put it here. 3 times 350,000. 1,000. What else do we have as their cost? Labor, right? How much? So 4 at what? 350. What do we have? 1,400. What else do we have? Is that all for us? What about the external sales these guys do? We didn't even, did we bring it? Did we bring these guys external sales?
The external is 200.
We brought it?
Yes.
Okay, we brought it. Okay. Then any other cost item, you are going to be careful. Okay. I think we brought everything. Let's peruse well. Selling price, paying to adopter, and we've used that. Labor cost. Annual fixed overheads. Okay, annual fixed overhead, we'll deal with that. But look at it. In addition to the material and labor, Division A incurs variable cost of $1 per unit for all adapter sales externally. Can you see that? So, selling overheads. How much did they sell externally? 200. So they incur $1 by 200. Can you see that? And so that will be 200 here. So give me total variable cost. For each division. Division B, 13,950, okay. 15,250. Now, we can do this one, can do this too. So give me contribution. The variable selling price minus variable cost. 14,000. Are you sure about this figure, 14,000?
It's 13,000.
13,000. Francis, don't give me more.
10,000.
10,300. So that's the contribution, right? Then what do? We less fixed cost. Give me fixed cost for Division B. Five? 5460. Because we are working in 3 zeros up. Then A. 2? Okay. So we subtract that. Yes. Division what? Yes. Why would it be negative? Revenue, your total revenue is 27,000. This is 30,000.
No, I'm talking about A.
No, A.
Where is the total revenue?
The total revenue
So it's supposed to be negative. Yeah. Hey, we have forgotten it by doing even for the total company. Okay, don't worry, let's finish. So this will be negative.
No, the 10,000.
300. Okay, so this is correct. What was this figure? Come on, my paper. 50.
300.
Eh?
No.
Eh?
I think it's 15. 15.
Yeah, 15
Wait, What are you adding to get 15?
This one was.
Is this not these three things fair?
Yeah.
How can these three things give you that big figure?
Yeah, this one is 14,000.
Okay. Okay, so let's go contribution. So what do you say is contribution?
So the top is 15 to
15. Yeah, that's the variable cost.
50.
15 to. So contribution.
10,000.
And you say is.
Negative.
Okay. Wow. Negative contribution. So give me the final answers.
So that means the question
No, the question cannot be wrong. I just want to make sure. This thing shouldn't be 14,000 though. This thing should be 1,004. Who gave me that 14,000?
4 times 350.
Is it not 1,004? You know, 1,000 because we are making the 3 zeros up already.
Yes,
So you just punch 350. So 3 times 350.
1,004.
Yeah. Because you can't get lost contribution like that. Sounds good. John, are you okay?
Yeah.
So 1,004. So please re-add for me.
2,650.
2,650. So now subtract that from the 4,900. 2,300. Now, profit for the year.
So the second one is
100. 7,990. Okay, so look, when we want total, this guy comes here, right? 1950. No, you know that we mentioned that the cost, these things will be within only what? The department, isn't it? So in total, we can just bring this total profit. What will be the total profit?
Will be 7,690.
Yes, 7,690. Because if you say you want to bring these guys,
7,690.
what do I do?
7.
7. It means I'm hungry. So I'm seeing stars now.
See why you have to start with everything.
See.
Every time you took me like
I hope you get a treatment. So look at how this question is. You read the question and you're like, meaning fear, but it's the question. So that's how it is. So put it down. So A sells to B at 13. A's capacity is 350. A can sell to the external people at 15. The output to external people is 200. So the question is, this department want to go and buy this 150 they are buying from the outside at that same price. The question also is that division A can also sell to the division B. So what we ask is, the examiner is requesting us that for the output, so assuming the new policy has changed, ensure the optimization of the group, calculate and discuss the number of adapters which division B should buy from A and the number of adapters which A should sell to the external party. So the question is this: if these people can buy from external at this very price, if they can buy from external at this very price, and these people capacity is 350, how many units should A sell to external and A sell to B in order to optimize the group policy. Remember, it is not by each division, no, it's the company's policy. So what do you think? The 150B meter, they can buy it from outside at the same price. And these people can sell at 50. So how many units must they sell to these people, and how many units must they sell to the external? In maximizing group policy.
They can sell all to external for 50. Isn't it?
That's your suggestion. That they should sell all 350.
Yes, and then you will buy from
The 150 from outside. But the question is, what is our maximum external demand from the question? What's the maximum external demand from the question? Maximum is 200. So irrespective of whether these people who want to buy out or want to buy in, to achieve the group policy, B can sell maximum of 200 to the outside. So still, A has to what? Sell the 150 to B. Make sense? So that is the idea about the question. So from the question, what we see is that the maximum to external people is 200. If there was no maximum, they would have sell all the 300, then they should go outside and go and buy. And the group policy will optimize what? It profits. So the answer to the question is that since the maximum external sales of A is 200, A will still sell 200 outside and 150 towards B. And so that is the idea about the question.
So it's just written.
Yeah, it's just a written thing that you make for everyone. So let's go to question 4. DAFCO manufactures 3 products, X, Y, and Z. Demand for product X and Y is relatively elastic, whilst demand for product Z is relatively inelastic. Each product uses the same material and the same type of direct labor, but in different quantities. For many years, the company has been using full absorption costing and absorbing overheads on the basis of what? Direct labor hours. So they absorb overheads currently on what? Direct labor hours. Selling prices are then determined using the cost plus pricing. This is common within this industry, with most competitors applying the standard markup. Budgeted production and sales volume for X, Y, and Z for the next year are as given respectively. The budgeted direct costs for the 3 products are shown below on per unit basis. In the next year, DAFCO also expects to incur an indirect cost of 1,377,400, which are analyzed below. Nice one. The following additional data is given. Products, blah, blah, blah. We are given that. We'll come back to it. DAFCO wants to boost sales revenue in order to increase profit, but its capacity to do this is limited because of the use of the cost plus pricing and the application of the standard markup. The finance director has suggested using activity-based costing instead of absorption costing, since this will alter the cost of the product and may therefore enable a different price to be charged. So we are supposed to calculate the cost of the product using the current state or what? the absorption costing. And so the company is I. Currently, the company is using the absorption costing, and the absorbing overhead is using labor hours. We've been given, that means we need to calculate the overhead absorption rate. And overhead absorption rate is total budgeted what? Overhead over what? The labor hours. We've been given the budgeted overheads in the question as 1,377,400. Can you see that? But what is the labor hours? We don't know. So we need to calculate the total labor hours for the company. So how do we do that? We put down a schedule to do that. So products X, Y, Z. What is the budgeted annual production for each of the products?
20,000, 16,000,
Okay. Then what is the labor hour usage per unit?
2.5.
30.
Per unit.
30 for X.
Hey,
30 for X.
Relax. The 30 there is in currency. Do you know that?
Okay.
So it's 2.5.
Okay. Where is the 2.5?
Divide by 12.
Yeah, you divide by 12. So 2.5, 3, and then 2. So we multiply to get the labor hours. Uh-huh.
50,000,
50,000,
48,000,
48,000,
and 44,000.
44,000. Then we need to get the total labor hours.
142,000.
Nice one. So when we have the labor hours like this, what do? We can now calculate the overhead absorption rate to be equal to that figure there. 1,377,400 over 142,000 hours. What do we have?
9.7.
9.7 per hour. In the question, did they say we should calculate full cost per unit or full cost for the total company? Full cost per unit, right? So it's very important to establish that. Did you do this, Arena?
No, I was just doing it.
You were just.
When you left and you went to it, I was trying to.
Okay. So let's look at the cost sheet. Under what? Absorption costing. But this is cost sheet per unit. So products X, Y, Z. So what are the cost items? Direct material is there. How much?
25,
Direct labor.
36.
We get what? Prime cost. 55, 64, 46. Then we bring what? The overhead. The overhead is the workings we've done. It is $9.7 per hour. How many hours does X use? So 9.7 by 2.5.
24.25.
Next, 3 by that.
29.1.
Next, 2 by that.
19.4.
So let's get a total cost now. Mm-hmm.
65.4.
65.4. So these are the things. So that is the I aspect of the question, the absorption costing. The the examiner said we should calculate the full cost, but we should use activity-based costing. So in doing that, what do? Now, the cost drivers given to us in the question is that machine setup cost is what? 280,000, and this is based on number of what? Batches. Material ordering cost is based on number of purchases. Machine running cost is based on number of machine hours, and then general facility cost is based on number of machine hours. Now, so since, listen carefully, since machine running cost and general facility cost are all absorbed using number of machine hours, we can add those two and calculate overhead absorption rate for those two things together, rather than calculating it separately for them. So we need to get the machine hours. How do we do that? Do we already have machine hours for each product? We've been given per unit, right? So we can get for each product. So let's put it down. X, Y, Z. So machine hour per unit. What do we have? What are the machine hours per unit? 1.5, 1.25, 1.4. Then we need to multiply it by what? The annual budgeted production. How much? 20,000. So let's multiply up.
Get 30,000.
20,000.
30,000.
So let's get total labor hours. What did I say? I said, since the machine running cost and the general facility cost are all having the same cost drivers, we can add the two together and use the same thing to calculate the overhead absorption rate, rather than calculating for them separately. I don't know if you understand what I'm saying.
Won't the rate be smaller?
We've merged the two.
Yes.
So that means when we are taking it, we will take the two. No, it's not oneness. It's about saving time in this kind of scenario. So I just want you to see, because running costs and general facility costs are all absorbed using machine hours, we add the two. Look at what I mean. If we calculate overhead absorption rates, okay, for machine running costs, what will it be? 420,000 divided by what? 80,800. What do we have? 5.20. Then overhead absorption rate for general facility. What do we have? 361 400 over the same figure. What do we have?
4.47.
And I'm saying, instead of doing this separately, is the denominator not the same?
Okay.
So add the two, divide it by the denominator, and you will get this answer. Yeah. 420,000 plus 361,400. What do we have? What do we add? 420,000 plus 361,400. $781,400 divided by 80,800. 9.6. What is this? This plus this is what?
9.6.
It's called saving skills.
That's fine.
If you go to the absorption, like to separate them, you'll be tempted to use 9 for each.
When you go to separate them,
That's good.
when you get there, why will you be? That means that when you get to the activity-based costing, when it comes to the overheads,
Yes.
these two will be merged together. Are you getting it? So that if this is per hour, you multiply it by. Sorry. Are you getting it?
Then you have to merge the
No, it is these two costs that will be merged,
Yeah.
but the rest of the other two will be done differently.
Okay.
Let's take with this, okay? To avoid confusion. Let's do this. Let me just do this. Okay, so that is the overhead absorption rate for these two. Then there are other cost drivers in the question, like we were told that the machine setup cost is dependent on what? Number of what? Setup, isn't it? What is the total setup? What is the total setup? No, number of badges rather. What's the total badges?
Total badges for the three.
Yes. We are not giving total badges for the three, true or false? Because we are giving batch size per unit. So what do? We need to do workings for it. So we put a schedule down, products. X, Y, and Z. How do we do that? We bring the budgeted units. What are our budgeted units? Uh-huh. 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 Then we are told that in each batch, what is the batch size?
500, 800, 400.
So batch size is what? 500, 800, 400. So if this is the total unit we want to produce, and each time we have to demand, or each time we are demanding, we can demand 500, then when we divide them, we get what? The number of batches. I don't know if you understand. So when we divide, what do we have? 40, 20, 55. So this is the number of badges. Sounds good? Then we are also told that material ordering cost is based on number of purchase orders. Number of purchase orders. Now we are giving down there as number of purchase orders per batch. Listen carefully. Number of purchase orders per batch. If per batch, then if we are looking for number of purchase orders, we have to look at the per batch times the number of orders to get the number of purchase orders. I don't know if you get the idea. So this is the number of batches. Per batch, how many purchases do we do? 4 for X. So number of purchases. 4 here, 5 here, and 4 there. So each batch we want, we will do this number of purchases. So what is the total number of purchases we will be doing? We multiply. 160.
400.
100. Is it not 100? This. What's the way Diego? 220. Please, do you understand? Now, so back to the question. If you come back to the question, to calculate the overhead absorption rate for machine or setup cost, what do we use? What is the setup cost there? 280,000. Can you see that? Divided by, it is based on number of badges. What is the number of badges? Total of this will be what? 115. Now I don't have space, otherwise I would have written the total here. So I'm just ruling a line here and I'll put the 115 there, okay? So 115, what do I have? Hmm? 2,000. 0.7 per batch. Then if you want to calculate the overhead absorption rate for the ordering cost, the figure there is 316,000 divided by number of purchase orders. What is our number of purchase orders? This. So total is what? 480. So what do we have? Six five eight point three per what? Per purchase order. So put it down and then let's do the absorption cost. Let's do the final account. So machine running cost is based on what? Setup. And what is that? Yeah, it's based on setup. What is the setup? Per what? But it's dependent on the batch. So my mind was doing me. So this times what? X is what? 1,500. That is batch size, nigga. This is number of batches. So you multiply it because this is number of batches. That's why we said per batch. We didn't say per batch size. Do you see the switch? So please punch for me. Fastest hand, please. 2434.78 times 40. That will be for X. The same figure times 20 for Y. The same thing times 55. Okay. What about general factory cost? It was absorbed according to what? Machine hours. What was the overhead absorption rate for general factory cost? 4 point times, what was the hours per unit? I don't have my own here. Hours per product, sorry. Factory machine hours. Total. So multiply. Edwina, do you understand? 134. Multiply for Y. Multiply for Z. Machine setup cost is also based on what? The hours like that, right? So multiply for me.
156,000. 104,000. 160.
Then ordering cost is 658.3 per purchase what? Order. Number of purchase orders, right? So we multiply for X. 160 times that figure. 160, sorry. That figure by 100.
65,000.
Mm-hmm. That figure by 220.
144,820.
Good. Good. Then we get total. 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 It's a munche, level 40.